but the clock, the 3-day clock, didn't start until Monday. So now you're really talking about 5 days, right, before you might see that. Now, some banks, depending on what bank you bank with, their business day ends at 3 for some banks, some other banks at 4, some other banks at noon, and some other banks at 5. What does that mean to you guys? Again, think about what I'm saying. You take your paycheck today to a bank that their business day ends at noon, but you took it at 3 or 5 o'clock after you got out of work. The clock didn't start ticking until the next day. So all of these examples are for you to say that when you think you have money, you don't have that money. Now, why does the bank take these days? Because just because I gave you a piece of paper doesn't mean I have the money. It means maybe I thought I had the money when I gave you that check, but in the middle I got carried away and I saw a sale of a purse I had to have. I bought it. Next thing you know, I don't have enough to cover that check. So the check is traveling between my bank and yours, and by the time your bank comes back to mine and says, give me this 200 bucks, and my account really only has 145. So now my bank is saying to her bank, guess what, Maria didn't have it, too bad. So they're sending back the check, coming back to you saying, guess what, Maria didn't have the money, you're out of luck, what do you want us to do with it? If in the middle of this whole cycle, you went and you spent money that you didn't have, guess who's in trouble here? You, in this example, right? Because the bank is a facilitator for the money. It is not our job, it's not our responsibility to make good on the money. We're not responsible on your decision making. We're not responsible on checks being good or bad. We are doing our own process. It's also not our job, even though it should be our job, to teach you what I'm teaching you today. Because if you don't know the name, the rules of the game, how can you win, right? So any one of you could have gone and spent that check or a part of that check, only to find out, well, Maria got carried away, she didn't have the money. 2 weeks later, you get a bounce check. That causes you to bounce check. Anybody here knows how much you pay for a bounce check?
Is it the same at all banks?
No.
That's what I thought. I think it's 50.
Generally speaking, a bounce check, it's between $30 and $40. Okay? Now, you bounce a check for $5, $30. You bounce a check for $200, $30. You bounce a check for $1.95, $30. You see how expensive this proposition can get. So starting today, you are empowered to know what game you're playing. How do you do that? Because starting today, your life becomes all about living based on available balance. When you make a deposit into the bank is going to give you a receipt. When you make a deposit on an ATM, you're going to get a receipt. I want you to start paying attention starting today, because you're going to see 2 lines, balance and available balance. Now, the longer that you are in a bank without getting in trouble, the quicker the computers of the bank will begin to trust you and will lend you money in advance of itself, okay? So if you go to a bank today and you open an account today, the bank is going to give you the general, not all banks, but generally speaking, the first $100 of that deposit is going to become available instantly, okay? However, keep in mind, that if that check you just put in the bank is no good, you're out of luck. We're gonna get you. We are definitely going to charge you the $30 or 40, whatever the bank charges. We're gonna come after you. We're gonna expect you not only to put back in this account the money you spent plus the $40, and if you don't do it, we're going to freeze your account. And if we freeze your account, we're gonna charge you a penalty on top of it. And if we do that, and 90 days go by, and you haven't given us all the money back that you're in trouble for now, we're going to send you to what I call the bank police. Okay, and we're gonna talk about the bank police in a little bit and how that impacts credit or not. So going back to the square, because if you take anything from today's class, this is the basis for you staying out of trouble. Every time you make that deposit, you're gonna look at the receipt, and this is what you can spend at any given point. When you go to your online banking, you're going to see first the balance, and you're always going to look for available balance. And if you see that there's $100, you just made a deposit here of 300, and let's say that you have 50 before, so in that one moment, this may read that you have 150, right? That's the difference between these two. But you still know if it's a paycheck, and if that paycheck is from an entity, government entity, or a big employer, then it's 99.9% sure the money is good, okay? So you do have the 150. But on the other hand, if it's a girlfriend or an aunt or whoever, right? And you don't really know, and you cannot assume, guys, that because somebody you know and you like gives you a check, that that check is good. Because things happen, and people mean well. But again, keep in mind, most clients that I talk to, business owners, don't know what we're saying here today. So they're not past bouncing checks. They're not past getting into trouble. Except if you get into trouble, you're the one stuck paying these fees, right? So unless that it is a very, very solid company that's giving you a check, even when you're seeing this, you would really think, I have $50. Really, that's what I can count on. So the next thing that people would say to me, well, I need to pay my car, I need to pay the rent, I can't be waiting for all this time for money coming and going and all this stuff. What do I do? If you really need the money because you gotta pay for something today or tomorrow, the only thing that's peace of mind for you is to take that check to the issuing bank. So in this case, she would come to my bank with the check I gave her. We go to the teller line and would say, I need to cash this check. And yes, some banks will charge you a check cashing fee. It could be $0, it could be $5 or whatever. But you're gonna walk from that bank with cash. You're going to go into your bank and deposit that cash. And now your available balance truly is 350. That's what you have, that's what you can spend. But that is the only way. Another option is to do direct deposit from your paychecks onto your bank. Why do you do that? Because direct deposit travels as cash between the banks. So when the employer pays you, the money is immediately cash on your available balance column. And normally, direct deposit comes into the bank the night before. So if the person gets paid on Fridays, usually the cash is in the account Thursday night. And it's instantaneously available. Because it travels as cash, you will have, once the money hits your account, there's no possibility of it being bad money. Okay? Yes?
You don't have to take a a check that is from the issuer to the issuing bank do you to get it cashed? I mean, you can take like a check that was not written from a particular bank and take it to any bank and have it cashed, can't you?
No, not any.
Well, not any,
that-
but like perhaps
yeah.
the one you have an account at.
You can, some will, some won't, depending on the amount of the check,
Okay.
depending on your credit worthiness. You can, if you have a history of having checks that bounce, you may not be able to do it. But sometimes you can. However, keep in mind that if you do have a very good history and the bank cashes that check of another bank with you because you have an account there for a while, if that check is bad, you're on the hook for all the money. And if you spend it, tough luck.
Yeah, what I'm saying is that like if you can take, you know, a check to a bank that doesn't necessarily match up, you know, it's not from the issuing bank or whatever, and you cash it, can't you just turn around and deposit that then?
Well, why would you? Why wouldn't you deposit it?
To get around the, whatever you're talking about, of it not showing up 3 days later?
No, because if I bank with Bank A and you bank with Bank B,
Yeah.
I give you a check. You go to your bank, Bank B, and you cash my check from Bank A.
Yeah.
Bank B is giving you the courtesy of cashing that check because you have a good reputation and a good history with them. That doesn't ensure them that my check is good or bad.
Right.
So they are lending you the money on good faith, but when that check goes from your bank to mine and it turns out, oops, I spent the money, your bank comes after you.
Yeah, I understand that. What I'm saying is you can't just take the cash that you got from that check and then deposit it? So that it's actually in your account and you don't have to wait that 3-day period?
Yeah, you can.
Okay, that's what I'm,
But
yeah.
she's saying that if it bounces.
Oh, no, I understand.
then
I'm,
Yeah.
I'm saying in the situation where it doesn't bounce.
You
yeah.
can,
I'm
but the
assuming it
goal,
doesn't.
the goal of it, the goal of this whole process is to minimize your risk. Again, you're taking a chance because you don't know that my check is good. And you, if you cash it, you got $300, put it in your account, you're like, oh, okay, my available balance is $350, I'm going shopping. Now you've spent the money and my check turns out to be bad. The bank is not responsible for you not knowing that my check was bad and that you went shopping with money you really didn't have.
Yeah, I recognize that. I'm just saying, like, in most cases, I've never gone to the issuing bank from, like, my employer, for example, and I've never had any problems with that, so,
Well, like I said,
yeah,
an employer can be great and it would never happen.
yeah.
It's just a matter of Russian roulette and you using your decision making to know what's in your best interest. Because what you want to know, and I told you I would tell you about credit when it makes sense or not. A good banking relationship, as far as a checking and a savings account and all that stuff, it's not going to help you build credit. But if it's bad, it's going to help you destroy it. So now I'm going to talk to you about what I call the banking police. Yeah.
Before you go into that, Maria, if I deposit a check on Bank A and it was drawn on Bank A, does it speed up the 3 days?
Yes, yes. If you have an account with the bank of the person that gave you the checks, both parties have the same bank, that is an instant transfer. Because what happens is you go to we both bank at the same bank, when you put that money on in the instant that it goes in, they take it from me and move it over. So you are eliminating the possibility of the money being bad because they will not put it from my account to yours if I don't have it. So, yeah. Yeah.
I'm sorry, I have one question. So about the check. So if you write a bad check, then your bank is going to hit you with the fee. What about him? In
Oh,
the
they'll get
instance-
hit too.
So both people get hit.
I don't write bad checks, what are you saying?
Everyone gets hit.
Okay, the individual.
Yeah.
By your individual bank,
Got
Yes.
it.
not
Correct.
cross.
Correct. Both people get hit. Both people get hit multiple times, because what a bank tries to do is they try, sometimes it'll bounce, they'll hold it for a day, they'll try to redeposit the next day, hoping that now the other party has the money. If they don't, $35 more. Now you're-
Again?
Yes, now you're $70 of fees that you just accumulate. And if this goes on every day, then they may not try to keep hitting it. At that point, the bank will send it back to the other bank and say this is a bad check. And every time that this happens, whether it's your fault or not, the computer systems of the bank start putting tick marks on your account. Okay? The more tick marks you have, the more that when we talked about before the bank maybe releasing $100 of good faith, the more tick marks you get, the more the bank is saying, this person doesn't know how to manage money, this person is hiding risk and whatever, and next thing you know, they don't give you the 100. Next thing you know, not only they don't give you that advance money, they have the right as a high risk to hold it longer. Okay, so instead of 3 days, now we can look at 5 or what have you. Yes.
What about, because my banks have where you can link your savings account to the checking account just in case
Yes.
that happens.
Yeah.
And it's been happening to me a lot lately. Do those tick marks still show up?
No,
Okay.
no. Many of the banks will charge you a transfer fee, so be aware of that.
Right.
When the savings moves over money to the checking, they'll charge you, I would say the average between $8 and $12.
Yeah.
Which is significantly better than 35, and it does not affect that because you're lending yourself money,
Okay.
right? So, yeah.
So what about with that, some banks also do, I can't remember what they're called, like they're kind of like loan accounts. Like
Line of credit.
line of credits
Yeah.
or overdraft protection accounts. Do the tick marks still show up with those?
No, because that's exactly what a line of credit is
Supposed to do,
designed
yeah.
to do.
Do you want people, do you suggest people have that?
I, as a banker, this is what my instructions are to people. And I'm going to say this to you today about 20 different times. And if I forget, remind me to say it more. You need to know yourself. You need to be real to yourself. A line of credit, a credit card, or any such product only makes sense if it's not the window for you to spend it. Because if you have a line of credit for $1,000 for emergencies, but this means you're going to go partying and spend $1,000, and now not only you no longer have the line of credit, but you're in debt $1,000, that is not a good idea. So I will say to you again and again and again as a banker, you need to have a ruthless conversation with yourself. And you need to say to yourself, is a line of credit a good thing for me? As a theory, a line of credit is a great thing. And for a person that's good with money, it's a must. But if you're not good with money, do not do it. Don't do it. You're setting yourself up for owing money. The temptation is too big and it's too easy. And when you get in trouble with that line of credit, big X on your credit. You do not want to go there. So be brutally honest. Yes?
You said a line of credit is a must for a person who's good with money.
Mhm.
Why is it a must?
It's a must because it can buy you the time to fix a problem if it happens. Let's say I gave you that check and my check was no good. In the middle, instead of you getting into trouble, being hit with the $35 and the tick on your account, the line of credit is going to advance you the money, it's going to lend you the money of the check that I messed up on your account, which keeps you out of trouble and it gives you time to sort things out. So it protects your credit. It means because it lent you the money that I was no good at giving you, it means your other checks that you wrote didn't bounce because the money was lent to you. So it is a very big protection, and it is a wonderful way to start to build your credit. A line of credit, because it is a true credit product or program, will build credit, and it will trash credit. Now, with a checking or a savings account, it will not build credit. It will trash credit if you're bad with it, okay? So before I totally move on from this subject, I mentioned to you that a state and local bank defined for us as Maryland, Virginia, DC, and Delaware, that the average release in banking terms is called a hold. A hold is the time between you putting money in the bank and the money being available in your bank. So this window, that's a hold, that's happening here. That's 3 days. Again, when is the banking schedule? Monday through Friday, Saturdays, Sundays don't count. And if you are very tight for money, you would do well the next time you go to the bank. Find out at what time does your banking day close. Because it may be noon, or it may be 5, or it may be later, right? So you want to know that? Okay, now, if that check you just got happens to be, in our case, from California, from New York, from Ohio, that is considered a non-local check. The banks have the right to hold it up to 5 days, okay? 5. Keep in mind, 5 days might mean definitely mean not Saturday or Sunday, definitely means no holidays, and it may mean, if you put it at 5 o'clock and the cutoff was noon, really 6 business days, right? So that's a long time for this check to clear. So that might be a good time when you say, you know, let me go to the bank and cash this check if you really need the money to pay your car, your rent, or what have you. If you have pressure to do it, let me just go to the bank if they have a local branch and cash it and put the cash in. Because you are conceivably between one thing or the next talking about maybe as many as 10 days on this thing. That could cost you a lot of money, a lot of fees in the middle, and a huge headache, right? And keep in mind that one bad incident that causes you to bounce other transactions, each one of those is a tick against you, against your account. Okay, so we talked about a little bit about what I